And when you look at that chart, a lot of things become pretty clear. But this is the past 14 years. Bitcoin's not just winning. I mean, it's up 78% in 8 years. It's up 103% in 12 years. It's up 168% in 14 years. It's consistently winning, and at some point, if you look at the numbers, you start to wonder, well, why is it winning, and is this a fluke? And the irony, of course, is that you still get questions from the normies every day, like, well, when does the run stop? It's like, when do nuclear reactors stop producing more electricity than water wheels? When does the airplane stop flying faster than the donkey cart? The answer is it's not going to stop, because it's structural and technical. Everyone in the world is searching for an asset uncorrelated to the S&P 500 with higher returns. Uncorrelated and performing. It's the holy grail. Banks have conferences on this stuff. Well, Bitcoin is that asset. It's an asset without the counterparty risk that comes from competitors, countries, corporations, creditors, cultures, or currencies. Everything else you own in your life has a counterparty risk to one of those items. Except Bitcoin.
The CEO of MicroStrategy, Michael Saylor, has once again captivated the entire world with his bold prediction regarding Bitcoin. By 2045, he thinks the digital currency might soar to an incredible $13 million per coin. The future holds the potential to transform the current financial landscape and redefine wealth. As one of the biggest institutional holders of Bitcoin, Saylor and MicroStrategy have supported this belief since 2020 by purchasing an incredible $7.5 billion worth of the digital currency. Saylor's approach is straightforward and uncompromising. He will always purchase Bitcoin, regardless of the state of the market. He envisions a future in which Bitcoin not only participates in finance, but also dominates and transforms it, with predictions indicating that its value may increase tenfold. We are now in uncharted territory as Bitcoin smashes records, soaring above $90,000 and speeding toward an astounding $100,000 milestone. Bitcoin has transformed from a simple asset to a worldwide movement, winning over doubters and demonstrating its irrepressible nature. Join us as we dive into exclusive clips from Michael Saylor's latest insights and discover why he remains so confident in Bitcoin's future.
The political problem is, how do we grow the economy of the United States? How do we deliver prosperity to our people? And how do we overcome a deficit? And all that while maintaining global leadership. So everyone, every institution, every investor, every company, every politician is struggling with these problems today. Bitcoin's the solution. Why is it the solution? Is it the solution? A lot of people are wondering that. Well, I'll put the Bitcoin return for the last 4 years on this chart I just showed you, and you can see Bitcoin is just punching a hole in all the traditional capital markets. This isn't 1 year or 2 years. This is 4 years, but you know, it happens to be the 4 years since MicroStrategy decided Bitcoin was the solution. And you might say, well, you cherry-picked that number. That's the low number. I cherry-picked that number because the other numbers are better, and I'll show you that in a second. If we look at this entire set of asset classes, they line up kind of elegantly. If you're actually holding bonds for the last 4 years, you lost 5% of your capital a year. They're losers. Every bank in the US is capitalized on bonds. Every operating company is capitalized on bonds. You wonder why the banks are sick? You wonder why the operating companies are sick? They're sitting on those minus 5% instruments, and that's their best idea. Gold's plus 6%. You might as well just hold gold. Real estate's plus 10%. The S&P's 15%. You can double it with the Magnificent Seven. Find the best companies in the S&P, the Nvidias, the Apples, the Googles. 29%. And this little creature we call Bitcoin is doubling that, 60%. And when you look at that chart, a lot of things become pretty clear. But this is the past 14 years. Bitcoin's not just winning. I mean, it's up 78% in 8 years. It's up 103% in 12 years. It's up 168% in 14 years. It's consistently winning. And at some point, if you look at the numbers, you start to wonder, well, why is it winning? And is this a fluke? And the irony, of course, is that you still get questions from the normies every day, like, well, when does the run stop? It's like, when do nuclear reactors stop producing more electricity than water wheels? You know, when does the airplane stop flying faster than the donkey cart? The answer is it's not going to stop because it's structural and technical. Everyone in the world is searching for an asset uncorrelated to the S&P 500 with higher returns. Uncorrelated and performing. It's the holy grail. Banks have conferences on this stuff. Well, Bitcoin is that asset. It's an asset without the counterparty risk that comes from Competitors, countries, corporations, creditors, cultures, or currencies. Everything else you own in your life has a counterparty risk to one of those items, except Bitcoin. Bitcoin is in essence orthogonal to the rest of the market. That makes it alpha. But you don't have to believe it from first principles. You don't have to study it. You can just look at the data. This is fidelity data. It's showing the lack of correlation and the Sharpe ratio. It's got the highest Sharpe ratio. It's got the lowest correlation. So even if you haven't read the book, The Bitcoin Standard, even if you haven't thought about it for 100 hours or 1,000 hours or 10 hours, all you have to do is just run the numbers. The market is screaming at you that it's an uncorrelated, high-performing asset. But to truly understand it, you have to go back to first principles. And this is my alma mater, MIT, and this is where I was taught to think from first principles, and they taught you how to build things that had never been built before and solve problems that had never been solved before. And it was an epiphany that you're actually expected and capable of solving problems no human being on the face of the earth has ever solved before. I mean, Elon Musk keeps pointing this out and proving it, and that's why he's the richest man in the world. The capital markets are full of people doing the same thing over and over again, the same way.
Bitcoin is a revolutionary method of long-term capital preservation, not just a misunderstood digital asset. In contrast to conventional financial or tangible assets that are vulnerable to volatility, taxes, or even destruction, Michael Saylor strongly contends that Bitcoin provides unparalleled security and resilience. Its decentralized design eliminates the need for middlemen, providing a shelter in a world where economic instability is estimated to cost the world economy $10 trillion annually. Due to its hard limitation of just 21 million coins, Bitcoin's scarcity creates the ideal environment for exponential development, transforming the way we both preserve and grow our wealth. Bitcoin, according to Saylor, is more than just digital currency. It is digital wealth, combining the advantages of tangible and financial assets while avoiding their drawbacks. The laws of the $450 trillion global capital market are changing as Bitcoin surges beyond $90,000 and targets $100,000. Bitcoin's unmatched ability to maintain and increase wealth like never before makes this event more than just a financial milestone. Now, let's dive back into interview and explore more insights from Michael Saylor. Don't forget to like, subscribe, and turn on notifications for more engaging content.
Right? Next time you hear someone say, well, what's the Bitcoin use case? There's no use case. The use case is the most valuable thing in the entire human race. It's $450 trillion. It's all the capital in the world. The use case is you get to keep your money, right? That's actually the epiphany. Once you understand that people are using assets for two reasons, long-term capital preservation, or the second reason is utility. Your yacht, your jet, your bakery, your farm, your ranch, your plane, company, that's utility value. Your piece of art you put on the wall, it's utility. Half this stuff is for utility, the other half is capital preservation. And the challenge with preserving capital is you either do with financial assets and they degrade over time due to entropy. Everything you invest in is subject to weather and war and tax and inheritance and income and excise. And these are the risk factors in every 10K. They degrade the capital. And so people that want to get away from financial assets, they buy land and they buy buildings and they buy physical items. But entropy degrades them too. There's a hurricane coming, in Florida right now. It's going to hit in the next few days. You can't buy hurricane insurance. You're just living with this chaos in the real world. And of course, I could talk about the litany of ways that your physical capital breaks down, but you all know it. What's the cost of entropy? What's the cost of chaos, confusion, and competition, inflation, politics, and war? Well, the cost is like 3% of $450 trillion. The cost is $15 trillion a year. It's trillions of dollars a year. Someone says, well, what's the use case of Bitcoin? It's like, well, we're not going to lose 10 trillion a year. Like, you get to keep the 10 trillion, right? That's what's driving people to Bitcoin. When you live in a world without Bitcoin, and you live in a world of capital assets that are physical and financial, you see your useful life is 10, 20, 30 years. If you buy a Ferrari or a yacht, you're probably not going to preserve your capital. But most people buy 10, 20, 30-year useful life assets, and they struggle and worry about them. How many people worry about their stocks every day? Worry about their building, worry about their business, worry about currencies, worry about bonds. There's an entire industry of worry. That's a constant struggle. This guy Satoshi came along and discovered a method to transfer value without a trusted intermediary. And everybody repeats it ad infinitum. Satoshi figured out how to send something of value between two people without an intermediary. But that wasn't the brilliant idea. The idea that's so profound it shakes the foundation of the economy is that Satoshi figured out a method to store value without a trusted intermediary. Because sending the value, it's like a little bit better than Visa or the Fed wire. Storing the value, well, that makes it the most useful thing for $450 trillion of capital. That's worth $10 trillion a year. That's the big idea. And it's a very poorly understood idea. Bitcoin represents the transformation of our capital from financial and physical assets to digital. What we've created is an asset without financial risk that's in a currency or a stock, and without physical risk that's in real estate or property. And that makes it digital capital. Not digital currency, digital capital. Everyone that's a hater, everyone that's skeptic, like, oh, it's a digital currency, it won't work. Well, that's because you decided to define it as the wrong thing. Yes, it's not a currency, right? It's capital. Once you understand it as capital, you realize that you ought to compare it to a $100 million building in Miami and think about the benefits of owning a building versus owning a digital building.
Michael Saylor strongly responds to one of the most prevalent questions regarding Bitcoin. What's the use case? He contends that capital preservation, the most important idea in the world, is the main application for Bitcoin. Long-term wealth preservation is the main challenge in a world where global capital is valued at approximately $450 trillion. According to Saylor, there are two reasons why people use assets, either for utility or capital preservation. Businesses, yachts, and airplanes are examples of utility assets that offer observable advantages without necessarily safeguarding capital. However, capital preservation is a never-ending battle because traditional financial and physical assets degrade over time owing to a variety of factors including taxation, inflation, natural disasters, and geopolitical concerns. He notes that these disorder and instability have a huge annual cost to the world, estimated at $10 trillion. Saylor contends that Bitcoin offers a revolutionary solution. Bitcoin makes it possible to store wealth in a digital format that is resistant to these conventional dangers, in contrast to financial assets that are susceptible to economic risks or physical goods that deteriorate. In addition to enabling value transmission without middlemen, Satoshi Nakamoto's invention was brilliant because it established a system that could hold value without the requirement for a reliable middleman, something that no other asset kind can do on this scale. If you found this breakdown insightful, please like this video, subscribe, and join the discussion in the comments below. Thank you for watching and see you in the next video.